Hey everyone, this is Ryan B with Practical Forex Trading, and this is your weekly analysis for UK oil, otherwise known as Brent crude, oil prices, if you will. This is a weekly chart, meaning that each one of these red and green candles, as we call them, represent 1 week of price action. We see this week that our sentiment is bearish, meaning I believe more selling is ahead, and that's for a couple of reasons. So we look at this multi-year descending downtrend. We saw our original peak at 2009, came back up and touched it in 2011, and has been testing ever since. We can see with our recent peak, that wasn't just too long ago, 2 months ago, we saw oil at $70 a barrel, and that was really the last hurrah for oil. And if we look at why that price is significant, if we draw a line there, we can see historically that's been tested all the way back to 2006. So when price couldn't close above it, we saw our price fall away, big sell-off, broke right through this, support at $47 to $45. Then we have what's called a gap. That just means where the next week's price action actually opened below, significantly below its closing price last week. So that's extreme selling volume. So we do have some support ahead. Significant support at $20 per barrel. Why I say it's significant is if we go back, this chart goes back to 1989, and we can see back in 89 there was resistance at $21 a barrel. It'll peak through from different geopolitical events, but that level really held for quite a few years. Then after it broke through in early 2000, it touched back there in 2002. So what that means, I anticipate, is that we will see prices hit $20 a barrel soon. But my thoughts is that it will probably hold there for a bit of time. And we see this triangle here I have mapped out, a price triangle. So I'm anticipating some kind of move like this where we'll see prices hit around the $20 per barrel. Even if it peaks under it for a bit, it should hold in the sense that price will close back above it. And then we could see a move over the next couple of years back to the $45 mark, right? That would be honoring this multi-year pattern, this descending bearish triangle. And then we would see our next big sell-off back to the $20 a barrel in the years to come. So who knows, though? We recently saw a giant break of support at 45, or just went clean through. So we'll see as the $20 mark is tested, which it looks like could have happened this week. Let's look at, let's draw a parallel trend. We're going to make a parallel to this giant multi-year sloping the highest highs. Because when price isn't at the highest highs or highest low, or lowest lows, if you will, you want to find a way to gauge where price is most likely to move. So here we see a price channel, right? Trend has tested it above and below multi-years. Now we see price moving below that triangle. So even if we saw a push back into this channel, my thoughts is that the $45 per barrel resistance level would hold. In order for that to change, we'd have to have a massive flux in global oil supply and demand from what its current status quo currently, because that's what's driving prices down so much. Among all the other market volatility and just the US dollar being so strong. Okay, so let's look real quick before we break into the intraday. So we see bearish candles closing out Friday, more selling dead ahead. I believe we'll see it this week open with more selling down to the $20 mark. If prices were to make a small consolidation or bounce, then the $38 previous gap mark would most certainly hold. We really see that price range, historically, price doesn't hang out long, right? Whenever price moves into this range here between $38 and $45 a barrel, it quickly scoots out. And so even if we were to see a retrace at this point, I don't think we'd see it go above $38 per barrel. All right, everyone, stay safe out there and have a very profitable week.